All right.
Let's get ready to crypto.
I love it. That's good. All right. Thank you, ladies and gentlemen, for being here. We have two Dans. Oh no, that's Rory. Never mind. That's good. Wait, fuck. You guys got to stop that. You guys got to. No? Okay, there you go. Thank you, everyone, for being here. I appreciate you guys as always. We finally made it so it's closer. There's food, there's drinks, there's paintings on the ceilings. So, it's really nice for us to get together in a place like this, okay? Today, we're going to talk about something that's pretty pertinent right now. It's taking profits, because I feel like that's something. Yeah, too late, right? It's over. It's over. Bitcoin fell off of a cliff. Yeah, we're all going to zero. Everything's collapsing. I think we all need to run for the hills, and I think we all need to hide out. I knew this thing was going to go to zero back in 2012, and now I think this time around it's definitely doing it. That's a joke, guys. Online guys, that's a joke.
Look here, not there.
Oh, right. That's a joke. But before we get started, as always, we're going to go around this beautiful room. 15 seconds. What's your name? And how do you take profits? My name is Sim. I take profits on the way up. And I get out of the market about 80% of the way up when I think it's the way up. And I do exit the market 100% sometimes.
I'm Connor. I take profits on the way up in increments and on the way down when I'm shorting.
Hi, my name is Wes, and I DCA out the same way I DCA in.
Dollar cost average.
Hi, my name's Nick, and I'm still working on it.
And working on it as well.
I'm Jason, haven't taken any profits yet. That's why I'm here. And also, I'd like to know more about how I can turn my crypto money into fiat cash.
Good.
Hello, everyone. My name is Lee. I didn't have any profit yet, but I'm heading to it, I wish. Thank you.
Hey, my name is Dima. I'm making some swing trading and day trading too. So that's how.
I am Sarah. I'm quite stubborn, so I end up not taking any profits. So I hold.
I am Sandy. I hodl and haven't taken any profits yet.
Hello, my name is Vlad, and I'm taking profits on the way up and down and sideways and whatever.
Left and right. Okay, perfect.
Right.
Hi, my name is Natalia. I have a good Excel system how I see my DCA, how I'm, my average.
Cool.
So once I know I hit a certain target, now I'm taking profits. Nice. I still don't take profits from Bitcoin. I don't think I'm gonna sell and take profit yet. But I'm trying to not fall in love with and trying to sell it.
Yeah, don't fall in love. Yeah. It always ends up hurting you.
Hi, I'm Natalia. I can't take profit because my account was hacked. I advise everyone not to trade when you're tired or when you're sleepy. But I will take profit from the next account soon. I was traumatized. I couldn't trade.
Thank you.
Hello, my name is Ross, and after being really good at failing to take profits, I learned, and I actually just took profits on a coin a few weeks ago. And what a concept that when everything just dipped, I was like, oh, I got this cash sitting around now that I can reinvest at a 25% dip. This is great.
Fantastic. You want to go on from the left of the room? Sorry, James.
Hey.
Name and how do you take profits?
Hey, I'm Jyoti, and I take profit on the way up. I try to take it on the way up, but that's about it.
Perfect.
Hello, I'm Cyril. I'm kind of new to the field, but I took my first profit a couple of weeks ago, so kind of happy. Following the guide.
I'm James. I try and take 20% profit once I hit a certain price point and then reinvest back into the project.
Hey, I'm Rory. It depends on the project really, but one project we just take profits every month. It's going to take maybe 10, 12 months to get the money out. Other projects that are more high risk, it will be like once it reaches a certain level, then we'll take all the capital out, be risk free, and then take monthly sort of income from it. Yeah.
Thank you.
Yeah, so I've been holding Bitcoin and Ethereum for about 4 years, and after our talk last week, Sims, I sold all the Bitcoin and all the Ethereum.
Perfect.
Right before it dropped, so that's when I took profits, and then I put into another project.
Nice.
So I've been holding that for 4 years, so that was, I think, a good move at the time. Another project, like actually have an income fund where I have a certain amount in there, and I just take, with Rory, just take money out every single month in the first of the month, and it just pays a salary, basically. And then I have a number of other projects like that as well. Yeah.
Awesome. Duke? Get off your phone, Duke.
Sorry. Hi, I'm Duke. Taking profits, but I'm about to.
Nice. Thank you.
Take a profit, I think when it's go up, and then I sell it.
I can hear you, but I'll listen to the record.
Hi, my name is Julia, and I trust all my profits to Ordin, and I take care of evolution where they go.
Aw, couple-based profit-taking strategy. That's cute. That's cute.
Hey, I'm Orden, and thanks to Sim, I'm learning to take profits and learning how to actually get it out to a bank account so I can like spend it instead of keeping it in crypto for like the past 8 years. So I made my first like withdrawal into a bank account for reals.
So you actually made money.
I haven't spent it yet, but it hit the bank account.
That's perfect. You're
Yeah.
on the step to actually turning it into lifestyle, which is the whole point of this whole thing.
Right.
Right? Amazing.
Hi, I'm Arne. I like to take 50% on the way up or all-time highs to invest.
Thank you. Whoa, 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 whoa. Easy. Easy. Hi guys, how do you take profits? Can you pass the mic? Where's the mic?
Hi, my name is Sabina, and I think I'm not really good in taking profits.
Yet.
Hi, my name is Lea. It's my first time meeting crypto, so I'm glad to be here.
Thank you. Thank you. All right. Thank you guys for that. And also, if you guys have cushions, can we have some extra cushions? Can we get some cushions for the ladies so they can get comfy, please? We got to get some more cushions. We'll get more cushions for everybody. Appreciate you guys. Okay, so what's the point of investing in crypto? It's not to invest in crypto and just sit in it forever and then just keep growing your crypto and see numbers on the screen go up forever. And then one day you have a lot of numbers on your screen. And then what did you do? Did you turn it into lifestyle? Did you live a better life off of it? Did you eat better? Did you sleep better? Did you, I don't know. Exactly. Lambo. Did you buy a Lambo? If you ain't bought no Lambo, then, you know. But seriously, think about that. That the whole point of being here is you need to have a strategy that goes all the way from turning your money into more money, into not losing money, and then into actually taking profits and turning it back into some form of money. Now, I'm not saying the US dollar is the best form of money, but right now it's the closest thing that we have to actually improving your lifestyle, okay? So please do not get attached to that number on the screen. That number on the screen is a hypothetical number. It is not how much money you have. It is not how much money you've made. I have seen people take their number from 100,000 to many, many life-changing millions, and then they brought the number right back down to where they entered, and then they exited, and then they cried for 4 years because they were like, I was a millionaire at one point. No, bro, you weren't a millionaire at one point. You were the same level of wealth you entered, and you exited the same level of wealth. Okay? Do not get attached to that number, please. That's the only point of control that the market has on you is your psychology. It's literally the only thing that they can control. An entire market is only psychology. And the way they control that psychology is make your number go up, and then make your number go down. Make your number go up, and then make your number go down. And eventually your psychology gets trained in a way, so either you get convinced this is number go up technology, which literally we joke, but we call Bitcoin number go up technology, because the number does go up over the long term. Then there are times when the number goes down, but you're convinced that the number always goes up. Okay? I've been here for a year presenting like, get into crypto, get into crypto, get into crypto, get rich time, get rich time, get rich time. For 3 months, I've been singing, get out of crypto, get out of crypto. You should really have that kind of a mindset that at some point you do want to leave crypto. And I don't mean leave crypto and go back to a bank. Ugh, nobody wants to go to a bank. Those guys are thieves. But you should at least think that, okay, I'm going to take my value, I'm going to grow it in dollar denominated, Bitcoin denominated, whatever you denominate yourself in. I'm denominating XRP. I'm going to grow my value denominated in that asset, and then I'm going to make more of that asset. And the moment I actually take profits is the moment that I actually calculate how much money I've made. One of the biggest mistakes a lot of people make is they think about how much money they'll miss out on. You know, if you think like that, you missed out on Shiba coin. Multi-billions of dollars you missed out on. Are you crying about it? No, you didn't know to call it. Okay? So you can't sit there and worry about what you're going to miss out on. Otherwise, what you're going to miss out on is the actual gains that are actually in your portfolio today. The reason why the wealthy make money is it's simple. They have a plan, they have a strategy, and the strategy is this: buy it when it's low, make it go up, when it's higher. Like institutional grade investors started selling in January of 2021. You guys remember January of 2021? Let's actually look at January of 2021. Let's actually look at the data so you can start to see how institutions play it and how completely opposite of that we play it. While watching, this is over 1,000 Bitcoin accounts, actual whales. Let's share the screen so everybody online can see it. Okay. Noel, I love how engaged you are right now. You're like in the screen. This is what the whales did. Okay? They ran the prices up. Can you please move the mouse? They ran the prices up from 2020, from COVID crash, all the way up until, what is right here? February. While we were all like scared, they ran the prices up. They actually dumped a ton of money inside. They went from 2,100 to 2,500, so 400 accounts, over 1,000 Bitcoin. So 400,000, but probably 400,000 to 4 million Bitcoin that was in there, right? That they bought and ran the prices up while we weren't looking. And then when we all came along, wanted to get rich, they dumped on us from February all the way until May. And the price didn't actually dump until May. So their goal is simply to just buy it low and then sell it high. And actually then they just left. They never came back to this market that we've been so excited about it going to the moon. They took their big bags and left. They're like, congratulations getting rich, because you're not getting rich off of our money. Okay? So when this happens, you should think, okay, wait, so these guys got in early and got out early. And I think I'm missing the boat, so I want to FOMO my way in. And then when my number goes up, I don't even take profits. When their number goes up, guess what they do? They dump it all. They are not married to Bitcoin. They're not married to any asset. So let's look at different ways of playing it, right? Some people are the hodlers. I'm a semi-hodler. It's a really good strategy for some periods of time because it insulates you against the volatility in the market. Because over the long term, Bitcoin is going to go up. Over the long term, in 30 years, Bitcoin's probably going to be at $100 million. You probably haven't heard that number yet, but it's not a it's not a coincidence that we've named 1/1,000,000th of a Bitcoin, a Satoshi. Okay? Eventually, Satoshis will be spent like dollars. 30 years down the road, but Satoshis will be spent like dollars. $100 million at that point will not buy $100 million worth of stuff today. It might buy what 100 million rupiah buys today, because the dollar is going to go down in value. But the point is, the number does go up over the long term. So a true hodler is like your micro strategy, Michael Saylor hodler. Puts everything they can inside of it, and they simply do not sell it. And they're okay with it going up, from 3,000 to 60,000, and they're okay with it going from 60,000 back down to 10,000, and they're okay with it going from 10,000 to 100,000, so on and so forth, because they're playing the 5 to 10 year game. If you have the constitution and the money that you've invested, you can sit on for that long period of time, that's a fantastic strategy. You pay zero tax on that. You buy, you simply don't sell. It's called buy, borrow, die. We've talked about that strategy before. You buy something, buy good assets, you borrow against it to generate cash, and then you die with it and give it to your descendants, and then they can do the same thing. 99% of people can't play that game because it's a 5 to 10 year game. And then it's a 20, 30, 40 infinite year game after that. Most people are not infinite players. If you want to listen to a talk, listen to Simon Sinek's Infinite Players versus Finite Players talk. It will explain to you these dynamics. Institutions play on an infinite scale. They're not trying to make profits at some point and turn into dollars. They're trying to maintain and accrue value forever beyond human lifetimes. That's hodl, 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 never sell, hodl, 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 hodl. That's one strategy, okay? My strategy is hodl when it's good, GTFO when it's not, okay? Hodl when it's good, get the fuck out when it's not, right? Because this market does this, it does this. Boom, 50% clash. Up, probably a crash. Again, I don't know for sure, but that's just how things should play out logically. So hodl, 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 sell. Buy, hodl, 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 sell. Buy, hodl, 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 sell. Yeah, it accrues more tax for me, but I've also figured out a tax strategy to make sure that that's not the case. Now, in that process, I count what I enter here. I actually entered here. I count what I entered here, and I count what I exited here. I don't worry about what the number is in the middle. This is how I make sure that they don't fuck with my psychology. I'm on a beach, I'm hanging out. I'm kidding, most of the time I'm working, so I'm too busy anyway. But the point is, I'm not focused on that number. I don't care about that number, okay? I'm more worried about did I buy it here and then did I sell it there? In which case, yeah, when I exit, I did count the number that I sold out on and how many XRP I lost per se. But so that's the second strategy. It's like short-term hodl. Okay, for me personally, that's by far the most profitable strategy. Because yeah, the guy who held Bitcoin from $200 to $20,000 and came back down to $3,000 in 2017, he went from $200 to $3,000. He multiplied his wealth over 10 times, which is ridiculous. Takes decades to do in the traditional markets. Good on you. But the guy who went from 200 to 18,000, sold out at 18,000, let the market run up to 20, and then crashed back down and bought back at 3,000. What he did is he got more Bitcoin. And the point is not to make more dollars. The point is to make more assets, right? If you don't sell, you simply don't make, like, I want to make more gold bars. Okay, how do I make more gold bars? Do I go buy a bunch of gold bars and I just hold those gold bars forever? Is it even mathematically possible for me to make more gold by just holding gold? No, right? I'm always holding the same amount of gold. It goes up and down in price. The way I make more gold is I buy gold when gold is good. It goes up, I sell the gold and I buy something else that's going to make me more value than gold. When gold crashes back down, I go back and buy more bricks of gold. Every single time I buy new bricks of gold, whatever amount of money I'm going to make in 5, 10, 15, 30 years gets multiplied by however many bricks of gold I just bought. Does that make sense? The real money is made on the way down. The real money is not made on, real generational wealth is made on the way down. It's not made on the way up. On the way up, you're making worthless dollars. They're worthwhile now, but like they're printing 40% a year. So if it takes you a year to make twice as many dollars, you still lost 40% of purchasing power to some idiot who's printing it. Let's go Brandon.
And that strategy is sort of like monetary value. He only looks at the accumulation of the actual tokens.
Exactly. Exactly. That's the best way of doing it. I look at how many assets do I have. I don't worry about, oh, I went up oh, and now I'm selling before I made the most amount of dollars. I don't care. As long as I get out at a point where I can get more Bitcoin, more XRP, more whatever, then I'm winning the game. Because every time I go up and I make more dollars, okay, I get a little bit more purchasing power. But every time I go down and I make more assets, I am multiplying my end gains. If I make 30% more assets in one move in a year, that means 10 years from now, if I was gonna make $100 million, I just made $130 million every time. So your game should be, what these guys are doing is they're trying to buy more Bitcoin. They're not worried about how many dollars they're making. The dollars are simply a vehicle to exit to and let the market crash and then come back and buy more dollars, right? So start thinking about it like that. If you're in crypto, what are you trying to do? Are you trying to make more dollars? You're missing the point. Like, what if I told you Bitcoin's worth 100 million rupiah? Do you want it? It's cheap, right? It's worth 1 billion rupiah. It's still cheap. I mean, I think billion is 100,000. It's getting expensive. But the point is, think about what we're doing here as either accruing more of the assets themselves, which requires you to exit, which fundamentally you can only do by exiting and entering at a lower price. What people do is they go, but what if I exit now and then it goes up beyond where I exited? Great. What you did is you put some money in, so put some dollars in, you made more dollars, you exited. If it goes up, you don't make a little bit of wherever you re-enter. Great, that's your downside. If you look at it as a downside, I don't, because I didn't lose any dollars, any value. But if it goes down, I multiply my end gains. So my upside is like insane compared to my downside. And plus, when you do that, you've taught yourself, I exit, okay? The reason why most people don't make money in this market is because they don't exit. They don't even know how to exit. How the hell do you exit? Oh, you took 100,000 and turned it into $1 million? Try sending $1 million to your bank account. And then come back to me because now you need to fly to some country to prove your ID and explain how you didn't launder the money to a bank that hates the fact that you first of all put it into this place anyway. So if you have not exited, try it. You will see the problems that happen when you exit. And first thing you'll notice is you'll just be like, I don't want to exit. I don't want to exit. And you want to click the button. And everybody's like, no, we're going to miss out on money. And then you're like, I'm going to miss out on some money. I'm going to miss out on 20%. And then the market goes, oh yeah, here's 35% drop in a day. And you're like, oh, fuck. Oh, fuck, I should have sold it. I lost 35% in a day. Or it's like 80%. You guys have not been through 80% bear markets. Trust me, I have to talk to my therapist about them, okay? And I didn't lose money in them. I just went through them and I saw people just get destroyed. It was like a fucking crypto war. These people who were like riding on the top of life became suicidal and this is real. People become physically ill and sick because they see what they think is their net worth, which is not their net worth, drop off of a cliff, and then they didn't actually make the money. You know who made the money? This guy. The guy who took their money. And these guys are very good at taking all your money. That's why they have all of it, and we don't have that much. Okay?
It's so important to grasp what you're saying about not identifying as owning the amount of money that's in there, because you're not until you take it out and explain it.
Okay, let's touch on that. You're God. Let's get real down to the Bali shit. You're not a fucking human. Okay? You're not a human. You are God. Look up the scientific theory of a scientist called Nassim Haramein. Okay? He has mathematically explained how the human consciousness and choice is the thing that controls the entire universe fundamentally. We're quantum entangled with every single proton in the universe. Therefore, you have a trillion protons in your body. The decisions your consciousness makes with these protons fundamentally affects every single proton in the universe. So you are God, you are the creator of the universe. Physically, fundamentally, scientifically, I can give you the calculations if you want to read about them. Go research about them yourself. So how is your net worth attached to some number on a little slate? It's not. You're only as valuable as you think you are. And you are the most valuable thing on the planet. And what they want you to go is like, see that number? That is your stature in society. That is your everything. Listen, 7 years ago, I was almost homeless. I could not find enough money to get food. I had to go to a food bank to get money, okay? I was so broke, I did not know where money was coming from. And you know what I did? Didn't give a care in the world. I used to be in Canada, smoke some weed, chill out, enjoy. I had money to get the weed though, over the food, right? So then you know what happened? I had zero money, and I had to go a week without food. And I'd already gone to the food bank, so I can't go to the food bank second time because there's a reload period. So I was like, okay, well, doesn't matter. I have complete faith in the universe. And $65 shows up in my account, and I can't track down where the $65 came from. And it turns out the Canadian government had come up with a new program where they were giving back money for the oil sales to people, and that was the first payment that came into me. And that $65 tied me over for the whole week. And from there, I've become a millionaire today. Sorry? Oh, I bought like a little bit of weed with it, and the rest of it was food. Yeah, I bought some noodles and then some weed. Yeah. I mean, weed will get you through shit better than food. You can survive without food for a while. Do not smoke weed in Indonesia, guys. It's no bueno. Okay? But the point is, this thing is nothing. If that thing goes to zero tomorrow, if you guys are not sitting here in the middle of Bali in the worst time possible because you're some like weak bitches who can't take care of themselves. You're good. If I took everything from you, it would take you a year to get it all back. You're capable motherfuckers. So do not tie your net worth to this number on this screen. You tying your net worth to this number on your screen is literally the only point of control they have on you. The only point of control they have. Not just this screen. That number in your bank account is not the money you have there, actually. It's the IOU that the bank has to give it back to you if they felt like giving it back to you, when you felt like taking it out, and if they felt like that's the right place to take it to, which they don't. His name is Nassim Haramein, Harrrmein. Yeah, he has tied together quantum mechanics and theory of relativity mathematically, and the guys. Can we close this? Can we close this door, please? Nassim Haramein, Harrrmein. He's tied together quantum mechanics and theory of relativity in a way that it explains every single thing science can't prove, and it simply requires the addition of the human consciousness and the quantum entangled nature of reality into the calculation, and it explained everything. Okay, and this is what theology has said. This is what spirituality has said. Everything has said this. I found the scientific proof from it, and you can run the calculations yourself. But so okay. Step number one: do not look at your net worth through that number. That number has nothing to do with what you're worth, but also what your portfolio is worth. Oh, it just went up 100%. Well, guess what? It just went down 35%. Guess what? Yesterday it went up 30% for some altcoins. Tomorrow it's going to fall off of a cliff. And if you emotionally attach yourself to that, you're on a roller coaster where they will destabilize you in a way so you won't make decisions using strategy and rationality. The rational thing to do is, I made more money. Let me take it. Okay? If you exit here, yeah, you're thinking, if I exit here, but I missed the money from here to here. Yeah, but you actually made the money. And you know whose money you took? This guy's. They're the ones whose money we're here to take, right? They're the ones with the big bags. 1,000 Bitcoin, 10,000 Bitcoin. Just wait, this is nothing. They are coming with hundreds of trillions of dollars that they don't know where to put because everything is denominated in dollars, and the dollar-denominated world is going to die systematically through the death of the dollar. They don't know where to put their dollars. They made a new vehicle called crypto to put all of their dollars into. They're coming. And their goal is to crush you to a point so you have no ability to take their dollars. And the way you take their dollars is by turning your dollars into more dollars, or you're turning your assets into more assets, and then taking them, and then pulling them out and sitting on the side like, I took it. I took this much of your money, and because in a market, somebody loses and somebody wins. Okay? So we went on a little bit of a tangent, but I hope that theology lesson made sense to you guys. Okay, so some people hodl. Some people hodl long term, right? You're a hodler, great. 5-10 year scale, you hodl. I like to hodl when it's good and exit when it's not. And you know when it's not good? When everything's going up. Everybody thinks when everything's going up is the best time. You haven't played this game long enough. When everything's going up is the time that the next thing that's going to happen is we're going to fall off of a cliff. And that's why I could literally see it in October, because I was like, you know, everybody was like, Let's get ready. End of the year, we're all going to get rich. YouTube, we're all going to get rich. Literally, the thumbnails, we're all going to get rich. It's literally on the Wall Street cheat sheet, which we pulled up 100 times. We're all going to get rich. I am a genius. When YouTube starts to tell you that, that is the mass hypnosis. It's called mass formation. That is the mass hypnosis of society. That is, we're auto-hypnotizing ourselves into the idea that we're all going to get rich. And the next thing that happens is it does go up, and all those people go, oh shit, here goes the moon town. You know, we go up to 69K and we touch it, and everybody's like, oh shit, it's leaving without me. Put all my life savings into it. Actually, they put out all their life savings right here. I will buy more on margin. Got to tell everybody to buy, blah blah blah, on the way up, right? And then 69 happens, and guess where the ship goes? It's not going to the moon. It comes down, but then it comes down and then it recovers. It goes down to 40, spikes, and then it recovers. And we go, oh no, it's okay, we're good. This moon trip is not canceled. I'm staying on the ship. And then guess what's happening here? The smart money's taking all your money. Price doesn't go sideways for no reason. Price goes sideways because somebody's buying and somebody's selling, so it balances out the price. Complacency. And the next thing that happens, without fail, since the tulip markets 500 years ago, we go through this. We went through this in May. Any of you that have been here since May, until May, this is what happened, right? We went up from January. We all went into thrill. We're all gonna get rich, and we rode it up from 40 to 67. It came down, kind of bounced around that like 60-ish mark for 4 months while the whales offloaded onto you. And offloaded means they took the money and put it in their own fucking pockets. And then May happens. Oh my God, nobody could have predicted. Apparently, Elon Musk sending a tweet tanks the whole market. That's not how the world works. Elon Musk's tweet was planned out by the guys who told him we will pull the share. We will stop investing in your company because you're not ESG, you're not environmental social governance compliant, because Bitcoin ruins the world and Earth and all this stuff. They say that, they do that. They've made a shit ton of bets in the leveraged markets, in the futures markets. They know when the tweet releases, dump it. So let me show you something. This I showed you the other day. This Wes sent me, this was really good. People need to see how the world actually works. And it does not work the way that you think it works. Here's Chinese whales dumping in unison. And then cheering about it because it just stole all your money. And they have a green candle. They call it a green candle going down. That's the game they're playing. Are you playing this game? No.
They're making a shit ton of money while it goes down. And
No shit.
buy back up after this.
No shit.
Over and over again.
Yep. So this is who you're playing against today.
This is so great to actually see.
I know, right?
Probably synchronized way of playing.
Yeah. And did you notice their green candles are on the way down? Your green candles are on the way up. You're like, go up, go up. They're like, oh yeah, watch this. And just took everybody's life savings. These idiots are never going to do this. Guess what we do? We write it up and we dump it on them every time. Do you think it's a coincidence that just in one day Bitcoin falls off of a cliff and smashes through 50K and smashes through 45 and smashes through 42 and goes down to 40 and wipes out people who thought they were geniuses and they were all going to get rich? 2.5 billion of wealth that it actually wiped out, plus 4 billion total that got pulled away from the markets because 1.5 billion people are like, oh, I'm pulling my shit out early, or like while this has happened, right? That's the game that you're playing. The game isn't buy assets and all this stuff. The guys who make bets make 10 times as much money as you, and you are the sheep that are being fed to the wolves who know how to steal all your money. Okay, so if you think you're going to trade, you're going to lose all your money. If you think you're going to outsmart these guys, they have one point to control. It's your emotions. And we're sweet people in this room, but like we're all emotional. Okay? It's terrible, but it's true. You think these Chinese guys have emotions when they're doing it? No, they got a strategy. They're like, we are running it up to this price. Once we're up to this price, everybody jump on your computers. Let's dump on them on the weekend when the Chinese markets open up while nobody's looking and take all their money. And by the time they wake up, they won't even know what to do. They won't even react because these dummies never take profits. Okay? So that's who you're playing against. So what do I do? Swim with the whales. Whale watch. Why do you think whale watching is my favorite activity? I wake up in the morning and I like have a coffee and then I whale watch. You know? But okay, so what do you do? What do you do? How do you not get fucked over that plan? Have a plan. What's your plan? Right? If your plan is I'm long-term hodl, then you buy this fucking thing. Then when and this is about to happen. It's coming. You will experience it live. That's why I'm doing this today. Everybody's gonna be running for the door. Everybody. Exchanges are gonna go down, outages, you won't be able to touch your money. It'll look like, holy fuck, I can't even make trades. My automated orders didn't fill, blah, blah, blah. I don't know, it's likely to happen within the next 6 to 10 days, but I don't know when it's gonna happen. When it does, you will feel what it feels like for the market to fall off of a cliff. You've already kind of felt it. We just woke up one day and all of YouTube was like, something just happened in the markets. Let's try to make videos in the middle of the night to explain what just happened. None of them called it. Yeah, they did. There's people on YouTube that call this from miles away, okay? I was telling you this since October because logically speaking, that's the next thing that should happen because you didn't take your money. You didn't make your money, okay? So if you're a hodler, then you buy the dips. When it goes down, best opportunity to dump some cash in there. If you really, okay, so what's actually going on? These are not magical money-making coins, money number go up technology that you're buying. You are buying pieces of the next stage of the internet. If you have not woken up to that idea yet, you're missing the point. The internet had a 98% crash, and then it became the global dominating force within 7 years. Within 7 years from that crash, it became the single most powerful thing in the world that had ever been released. And then an iPhone releases, and within 5 years, it becomes the dominating force across the world. Within 12 years, one technology came and took over every piece of your life, and we're all sitting here because of it today. Within 12 years. Crypto's been here for 10 years just building the framework and getting ready. We're about to go through an economic, global, socio-economic collapse, complete collapse of the old world, which happens every 100 years. You are here at the foot of the new world that's being built, and you're getting to buy pieces of stuff that there's so much opportunity you can't even imagine. Okay, so if you have not queued into that fact, queue in, and that should give you faith when things crash, it is not going to zero. A lot of coins are going to zero. 70% of crypto is going to zero, and it's not coming back. It's going to steal all your money and take it. They're either going to rug pull it, or in the crash, they're going to take it, and they're not coming back. If you buy shit, expect to get destroyed. That's your fault for trying to get rich quick. You're going to get poor quick. If you buy high quality assets, they haven't even started. I remember when Bitcoin was at $5, people said it was expensive. Then 200 was expensive. Then 2,000 was expensive. Then 20,000 was expensive. Now 60,000 is expensive. Then 100,000, then 1 million, then 2 million, then 5 million, then 10 million, then 100 million. Over the next 30 years, that's how it's going to play out. So if that is what's actually going on and you are at the foot of the greatest opportunity you've ever had, then you should be either taking profits on the way up in some capacity, which you could take in different stages, which we're going to discuss, or you at least understand this process. I make 3 trades a year, 4 if it's like a crazy year, because I hodl most of the time and I try to sell somewhere around here. I don't give a shit about this. I let somebody else ride this train up. Some people like to actually let this happen and they sell here, which is now the time, which is the time we're at right now. Most people, they sell here when they panic and they capitulate. So actually, let's just look at that before we go deep into the actual strategies themselves. Let me see where these people are. First of all, this is the game that you're actually playing. That's the wrong time to get out.
No, I mean like, so like if you don't get out before.
Yep.
It's like once it starts going down, it's like
My net worth number went down. Like my net worth number went down. Me wants the net worth that I had, right? Do you have a? Were you raising your hand? Oh, sorry. I thought I imagined it. When your number goes down, it's really hard. That's why.
I mean, like with the software and the exchanges, like, 'cause
That's a really good point. Getting out on the way down is a fool's errand because it's going down because everybody's getting out. Nobody wants to buy it. You're selling into a market that isn't buying your asset. On the way up, everybody's buying it. So you just put it on the market, it gets eaten up right away, right? That's why the whales sell on the way up. Why do you think they start selling here? Because they need a bunch of us dummies to come in, think we're going to get rich, start buying it all up, and then they sell it to us as it's going up. Okay, so just think about that. If that's who you are, you're the sucker. Okay, if you're the one selling into strength where people are buying, you're the genius. Okay, if you got Shiba Inu before it popped and then you sold it when it started peaking, you're a fucking genius. You made money. I know a lady who did that. She made $350,000 off of $200. She's a fucking genius. And then there were 300 other idiots who lost $1,000 because they bought it on the way up and they rode it all the way down. Okay, then you're the idiot. I'm sorry, but that's the world that we live in. But this is the game we're playing. If you don't even know what this chart is, this is the game that you're playing, like it or not. It's the leverage game. This is the amount of leverage that gets pushed into a market. Leverage is borrowing money and making bets. They borrow money, I borrow money, and I make a bet. First of all, I go and when Bitcoin's low, I go buy 10,000 Bitcoin. Cool, me buying 10,000 Bitcoin drives the price up. And I go over here and I go, I'll bet 10,000 Bitcoin that the price goes down. Okay? And then I'll leverage it. I'll bet 10,000 Bitcoin that the price goes down. When I win, I'll win 30,000 Bitcoin. Hell, I'm crazy. I'll win 10,000 or 100,000 Bitcoin. I leverage myself to 10x, right? Price is going up. They're like, whoa, well, this idiot's making a bet that the price goes down. Cool. Then once I made the bet, I come over here and I sell 10,000 Bitcoin. Guess what happens to the price? Price takes a bit of a dip. The rest of us panic and we go, oh shit, price was going up, now it's dipping, sell, 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 sell. Now the price actually goes down. So first of all, I bought 10,000 Bitcoin down here, drove up the price to here, and I sold 10,000 Bitcoin here. So I already made money on the 10,000 Bitcoin. Me selling 10,000 Bitcoin dropped the price a bit, and then you guys, we take the price lower. That makes my bet come true, and I make 100,000 Bitcoin. So first of all, I made money on the 10,000 Bitcoin, and I made 100,000 Bitcoin. Now I can go over here, and now the price is dumping down. So then I go in to buy 100,000 Bitcoin at a lower price down here, okay? And then it drives the price up. I make bets here, I sell it here, it dumps the price. These walls that you're seeing, these are not these are not natural price action. This is Chinese speculators going oh. Okay, that's what you should be imagining every time this happens. Chinese took your money there, they took your money there, and this is not just Chinese. These are because regulators in certain countries are actually watching a lot of this stuff, so they actually have conglomerates all over the world that dump in different timelines in different places. We've seen billions of dollars get dumped in within an hour into Bitcoin to drive the price up to convince us, because we're all sitting there watching the charts. We're all like, okay, price go up, I'm gonna get rich. Price go this way, I'm gonna calculate, and they're like, oh, these idiots just watch the price. Okay, cool, make the price do this, make the price do this, then come here, make the price do this, come here. You know what they're gonna do? These idiots are gonna draw a line from here to here. And then they're gonna go, guess what? Line go up, money go up, get in. Well, they're like, oh yeah. Well, now they're convinced that the line go up, make the most amount of bets here, bet the price goes down, dump it on these idiots. And we're like, the line go down. Line go down. So, line go down below, sell. And this was fucking BitBoy, the biggest YouTuber out there who's like supposed to be a fucking genius, who's wrong most of the time. He goes, guys, market. He was the guy who's like, when it's going to 69K, everybody get in. It's about to go to 98K. Plan B said so. 135K by the end of the year. We're all about to get rich. We're all about to get rich, right? Fucking, he told everybody these idiotic things when it was on the way up. Now that the line go down, now he's like, well, now if it go below 40,000, you should sell everything. It's like, dude, you just fucking told people to get in at 70, and now you're telling them below 40, sell it. What kind of a moron are you? And you have 1.5 million people following you? This is the world that we live in. Idiots are leading the world. Of course, that's why he starts every video with, if you like make money in crypto, you should talk to us. It's like you have not helped anybody make money ever. As a matter of fact, you're helping people lose money. So that's the point. We're watching a line that manipulators have made, and we're drawing a single line that we think is the way to actually look at a market. When they're like, these guys don't even understand that we finished the market back here according to their terms. We exited back here because we could see they left. Okay, where the hell were we? They left. They never came back. I watched this. It went down and I was like, okay, well, I'm still buying the dip. These guys have to come back. And then they didn't, and they didn't. And here I was like, oh, fuck. They front ran this whole market and these guys don't even realize what's going on. Here I was like, I don't know what the hell's going on here, but whose money is being pumped in to make this happen? And then it was like, oh, ETF launched right here. ETF launch, surprise, surprise. Everything got pumped up to an ETF launch and everybody's like, yeah, ETF launch. That means they're gonna buy Bitcoin. No, it's a futures ETF. It has nothing to do with buying Bitcoin. It actually arbitrages Bitcoin against the bets that they're making. As a matter of fact, we just brought in a pipeline from Wall Street and hooked it up to Bitcoin so they can bring their big bags of money and they can do whatever they want with it. They dumped Bitcoin from 60 something to 8,000 with one trader making one mistake on a keyboard. That's how much money they have, okay? So the game you're actually playing is this game. So, okay, you could easily look at this chart and start to make decisions. When the leverage gets all-time high, take some fucking profits because the bets are at all-time high. Guess what the next thing that's gonna happen is somebody's gonna take that money. Guess what happened last time? Oh, that's you. Guess what happened last time? It crashed and then it stabilized. Guess where we are right now? Stabilized. Well, guess what's gonna happen next? And when that happens, everybody's gonna panic, everybody's gonna run for the doors, everybody's gonna try to sell. And at that point, nobody wants to buy it because everybody's selling. And guess who didn't take profits? You. And guess how much money you made? Zip. Whereas me, I exited here well before all this shit happened, let somebody else play the game, went to the beach, hung out, quality, lifestyle, which is the whole point of all this stuff. And then once everybody panics, everybody runs, everybody's gonna be like, it's the end. That's when I'll come in and be like, cool, please feel free to sell it to us. And guess what's gonna happen to the whales next year? And when the whales start buying it, they start buying a year ahead of time before the peak comes. And they start selling months ahead of time because they need to offload all this stuff. 100%. Generational wealth is made in the bear market. If you think right now you're going to speculate on random coins who are going to make you all this money, you're late to the game. You should have been in those coins for 2 years ago, a year ago, no, not even a year ago, 2 years ago, you should have been in those coins. So look forward. So focus on not losing your money, number one. If you're lower than where you entered, don't fucking sell it. This is not financial advice, but it sounds exactly like financial advice. If you're lower than where you get in, don't sell it because that's how you lose money. My rule is I don't sell it when it goes down. Easy peasy way of me never losing money, okay? I'm not worried about, oh, I make more of this and that. No, I entered, I fucked up the trade, I'm not selling it when it goes down. Okay, nobody's gonna take some of my money. When it goes down, if you have cash, buy it. It's easier said than done, but I'm telling you this today. It's coming. The best buying opportunity that you're ever gonna see in your entire lifetime is coming. And when that happens, I know what's gonna happen. You're gonna be scared with everybody else. But remember, the moment you feel that fear, you are here. The moment you feel that fear, you are here.
The rates are coming in. Wait, can we wait please with the microphone?
Yeah.
You think that the rates are coming in next year, but you also expect a massive crash.
Yeah. So like the whales don't come in when things are at the top. The whales come in during crashes.
Like in January, now, start accumulating in January.
I mean, it would make sense for them to come in January because that's when they get a new P&L sheet. The whales have profit and loss sheets. They have accounting departments and they have tax codes that they have to follow and they have bookkeeping. All the things that nobody thinks about.
Great buying.
Yeah. Q1 of 2022. Q1 of 2022. So it's from like January to March or sometime in the middle of that. Yeah. So let's talk about that. You're playing the institutional game. Institutions play games in quarters and in years. And they have trillions, hundreds of trillions of dollars that are being burnt away by the Fed printing a bunch of money. They know that. They're not idiots. They know they got to put it somewhere. It took them a year to get their ducks in a row and convince their shareholders and convince everybody. Now corporations have been doing it and all this stuff. Now they're ready to do it. Now they're going to come in. Within the next 4 years, crypto is going to go from a fringe thing to taking over the damn world. Same way the internet did it. We are in the take over the world stage of the internet. So statistically, we're in the 1997 range of internet. Probably going to see some crash, which is just normal. And I don't think this is the crash. I don't think this is the true bear market that's coming. Everything that I'm looking at is telling me, you know, all the banks, everybody's saying, oh my God, stock market's going to crash. Everyone's going to crash it. Be careful, be careful. When they're saying that, then that's not what happens. When they're saying that, I become a buyer at that point. So what's probably going to happen is we're going to see the equities markets, everything start to take a turn. They've already taken a turn. They're having a little bit of a recovery before they take a tumble. They're going to correct. Everybody's going to panic because the narrative is that this is the end. Everybody's going to run from crypto because it's tied to traditional equities. When that happens, I'll come in and buy the dip, and we're going to see a parabolic rise like nobody's business. We're going to see a rise in all assets in dollar-denominated value like nobody's business, because the Federal Reserve is probably going to go into super hyper printing mode. And they don't actually print, but like, you know, they print a little bit and they give it to the banks, and the banks are using it as reserves to be able to lend out. And effectively what's going to happen is, and this is again my projection, what's going to happen is Omicron is going to now be considered the deadliest thing on the planet. They're going to say heart disease, myocarditis, blood clots, everything that is a symptom of a certain something that we know. Anybody who understands cellular biology understands that it's a symptom of something else. But they're going to say those are the symptoms of Omicron. It's super deadly. People are dying across the world. If you watch the numbers, people have started to just spike up as far as deaths. Soon they're going to release that news. Oh my God, this is a killer. Guess what? Global lockdowns are coming. Global lockdowns panic the markets. The panic shuts down everything around you. And when that happens, best buying opportunity on the planet. And then the Federal Reserve, who's saying we're going to tighten, we're going to raise interest rates, we're going to fucking all this stuff, they're going to say, oh, whoop, shit, oh, well, time to print a bunch of money and give it to people. They're going to go into printing mode like you've never seen before. That printing is going to lead, that money bleeds into assets in a very fundamental way, but more importantly, the people who are in those assets realize what's going on. They're going to want to rush to crypto. Crypto is now being seen as a safe haven asset, at least Bitcoin is. They're going to rush to crypto. That money is going to flow into crypto. Corporate wealth is going to flow into crypto. Regulatory compliance is coming in 2022. All of that's telling me this is the best buy the dip opportunity we'll ever have. Then it's probably going to run up in a massive way into some time in 2022, at which point it's likely that there will be a pop the bubble giant across all markets crash, which it has to happen between 18 months after August of this year, because there's signals that lead the market, and 18 months from August, it's going to happen. In that period, we will go through a massive, massive bear market for crypto, which again, that'll be a get the fuck out time of crypto. Okay, it's not always get in and like ride the wave up time. So again, that's my projection. Who knows? I could be completely wrong. So let's see what actually plays out. So when we're looking at how to take profits, that's what we're here to talk about, right? Now you've realized why to take profits. Let's talk about how to take profits. So if you're a hodler, if you're a short-term hodler, I do the simple thing. By the way, you should have this turned on all your devices. Two-factor authentication on everything. Anytime you log into something, you get a notification, and you have to verify it. Oh, well, apparently it's three-factor authentication now. Get in when it's low. Don't do anything until the market starts to either go sideways in some capacity, or you start to get psychological signals, or like I'm looking at the psychology of short-term holders. That's a great way of actually seeing when to take profits. This is short-term holder psychology charted according to profits, okay? When short-term holders are scared, buy the shit out of that thing. They're in full-on capitulation mode. So short-term holders tend to be dumb money. Listen to that. Short-term holders tend to be dumb money. So as I'm saying take profits, I'm also saying become a longer-term holder, because you go more into the game that smart money is playing. Short-term holders are capitulating, buy it. Short-term holders are in a state of fear, chill. Short-term holders go into a state of optimism, anxious optimism, start selling. Short-term holders come back into a state of fear, you should be done selling. Short-term holders go into full-on capitulation, buy it. Guess what happened now? Short-term holders were in capitulation mode until the price went to, what's here? Like 47K. At 47K, they became fearful. They're still in a state of fear, not buying it very much. When the price went up to, of course, all-time highs, basically all-time highs, this is like 65, I think, short-term holders became optimistic. The moment they become optimistic, guess what's happening? All their optimism is about to get wiped off. And that it's not a coincidence that at that time, short-term holders, all of YouTube was screaming, "You're gonna get rich tomorrow." There's people on YouTube who actually do the opposite too. There's people on YouTube who are saying that when things are not good, they say that things are not good. If you're not following any of them, you're in an echo chamber. Short-term holders went back into a state of fear. They went to optimism, start selling. Okay, get out of the market. Guess what? We're back to capitulation mode. And guess who lost a bunch of money in this drop that happened? And that drop, that giant drop that we experienced, was this. Just wait until we see one of these cliffs, or we see one of those 60-70% capitulation events. Then these guys are going to go deep into despair, at which point you should come in and be a buyer. Okay, so I got in around here. I sold once here. I tried to buy in here, couldn't, because the exchanges crashed. Bought from here to here. Watched my portfolio go down, but I was super happy. I was literally looking for pennies in the couch to be able to dump into this thing. Wrote it up again. I started to get the wrong signals here, so I exited here, sat on the sidelines, waited. Now we're going back into full-on capitulation mode, and we'll take some profits. You don't have to listen to the news. You don't have to listen to YouTube. You don't have to listen to Moon Boys. Data, statistical data. This is literally emotions charted according to profit. Okay, that's one way of doing it. Another way of doing it, another like really simple way of doing it, is this. It's like literally one signal. I mean, like it literally doesn't get any easier than this. If you're like, I don't want a data schmata, fear and greed index. Okay. Right now we're at 28. That's not low enough. Yeah, momentarily. But more important is this chart. Is the historical chart of fear and greed. When everybody was in a state of greed, and I'm not saying sell the greed right away. You should use some confluence of different things. But this was May. Buy the fear. Buy the fear. When everybody's greedy, sell it. Don't be greedy. When everybody's fearful, buy it. When everybody's greedy, sell it. When everybody's fearful, buy it.
So is that us right now?
Yeah, this is us right here. Everybody's fearful, but they have been more fearful in previous times. Like, this is not a bad time to buy. If you're somebody who follows this kind of strategy, the buying season has. Well, because I'm not just looking at just this chart, right? And also, if you bought the fear here, here it was the prices were much lower. If you bought the fear here, the prices here were much lower, right? So this isn't like, oh, the moment it goes into fear, you dump your life savings into it. But this is at least giving you an idea of like, now the market's in a full-on panic state. And that's why I do like a psychoanalysis. I look at the macro picture. See, I'm not watching crypto most of the time. Everybody's over here watching crypto, which is like a little ripple in the ocean. There's a financial ocean. We have this little ripple called crypto that is like a $2 trillion asset. dude, they don't even look at you unless you're above $1 trillion. So we're babies that just got birthed onto the scene. A couple $1 trillion is a rounding error when it comes to global Forex. Okay, they do quadrillions of dollars of transfer, and they have like a multi-% error rate on something, so they lose trillions of dollars. I mean, they lose billions of dollars, but the point is, $2 trillion is the most insignificant little ripple that we're sitting there watching, thinking, oh, my little atom of molecule of water is going up in this tiny little ripple. And then if you just zoom out and look at the wave, that's like the equity markets combined with crypto. Equity markets, the wave is going to determine where the ripple is going to go. If you zoom out more, the debt markets are the local ocean that the equity markets are within. So the debt market is going to determine what the equity market's going to do. You zoom out completely, and the entire world is the goddamn ocean. Okay, the entire world's dynamics determine what these the debt market's going to do. That determines what the equity market's going to do. That determines what your little ripple is going to do. I'm sitting there like looking at, I'm like C-scanning and looking at the ocean, and you can see these things coming from a mile away. So I don't just look at this, but this is a good way of looking at it. So buy fear. So now you have a bunch of indicators. Buy fear, go to the emotional chart and scan that and find out where the psychometrics are of the market. Yeah, but like this is in fear. I'm expecting more fear. I don't just like fear. I like panic, capitulation, suicidal thoughts, people jumping off of cliffs. Fear is one thing. Yeah, yeah. And when you look at the other metrics, you know, fear is this. I mean, I don't like suicidal thoughts, guys. Suicide, don't commit it. It's not good for your health. You can't make gains when you suicide, guys. Wait. Yeah. No, wait. Yeah. If you buy, borrow, die, it's okay. I mean, to be honest, the best traders are the ones who like bought Bitcoin 10 years ago and just died. So they're making the most amount of gains. They're just not converting it into lifestyle. It's a little difficult. Exactly. I mean, you could do that. But the point is, okay, this is fear. Fear just means we're here. I want this. I want deep capitulation. This is the profitable line right here. Up here, short-term holders are profitable. Down here, short-term holders are in deep loss. I like the deep loss. And this is the horrible reality, guys. I'm just being nice about this. There's vultures who look at this and go, I want to take their life savings. I want them to be homeless. I want to take every single asset from you. Central banks are here to take every single thing from you. Your house, your money in the bank, your assets, your business. Do you look around you? They can't take my girlfriend, bro. Unless they take my money, in which case my girlfriend will leave on her own. Babe, if you're listening to this, that was a joke, baby. I love you. Okay. We gotta go on tangents all the time. I'm sorry, guys. These are just jokes. We're just joking here. No, but I'm 100% serious about this. The end goal is within the next 10 years for you to own nothing, and you will apparently be happy living in a metaverse world. This is according to their own website, World Economic Forum, according to ads that they put on walls. If you need more proof that these aren't conspiracy theories, I can't give it to you. But you will own nothing and you will be happy. You know how? You know how? I'll cause a problem. I'll shut down the entire world and shut down your business and shut down your life and shut down your travel and psychologically manipulate you into staying the fuck home and ruining your own economy. Then I will come in and print as much money as I can, and I will buy up all the assets around you. Then I will shut down banks and cause bank bail-ins and take every single penny that you have in your bank account because you can't get it out. Then I will make sure that I destroy any possibility for you to go onto the internet without a digital ID, which we control. And if you step against us, we will shut you down because you won't have the social credit score. And if you do not have assets that you can service, I will fucking take everything from you. And apparently you'll be happy about that. For the greater good, for like all this. And this is the game we're playing. You're turning your wealth into assets, and if you do not take their money, they're going to take your money. Sorry, I always digress. I get a little too deep into these things. But psychometrics, fear and greed index, great way of looking at it. Pardon? Yeah, this one you can get from actually no, this one you got to pay like $10,000 for. But that's why what we do is we share this. we share this in the group for $200 a month, and we have like 40,000, 30 something thousand dollars of tools now that we take and we present and we bring it to the people, so you don't have to pay that much. But yeah. Twice a week I do videos on this. So I take these metrics and I present them twice a week. Otherwise, a lot of times you can even find it through like Will Clemente. Well, he doesn't do psychometrics as much, but sometimes he touches on it. Willy Woo, they're also presenting and stuff, but we're literally taking the paid version and bringing the data and giving it to the people in English, right? This is in our premium group. Yeah, it's $200 a month, and it's cheap for what you actually get. I don't like to sell shit. Like, if you find out about it, you find out about it. Another way of looking at taking profits is simple. Somebody who was it like I set targets. It's great. Like, I bought $1,000 here. Once it gets to 2,000, I'm taking my 1,000. Once it gets to 3,000, I'm taking another 1,000. Once it gets to blah blah blah, I'm taking a certain amount. Set targets, because the whole thing is you're gonna get greedy. The reason why you won't take profits is you're greedy. You're greedy. I'm greedy. We're all greedy motherfuckers. What do we want? More. Say it with me. What do we want? More. Right? Always. Always. Okay. Not you. You have enough. But like, you know, but like we all want more. So they know we want more. So what are they going to do? They're going to trick us into always staying in there and wanting more. So set targets. Enter here, take some here, take some here, take some here, take some here. You could set it according to percentages. A great strategy is you get in here, once you make more, take 10%. Get in more, take another 10%. You make more, take 10%. You're always taking cash. And then even if you come to here and you haven't taken a large chunk out, which if you're taking 10, 10, 10, you'll probably be 50% out by the time you get to here. Then when it crashes, you're a happy cookie. Because you're like, okay, great. 50% of my portfolio went down. The other 50% that bought in, guess how much money I lost? $0, right? So you literally did not lose money in that process. There's other people, like for example, JT, he does great analysis. He's our like chart analyst on, he does like Fibonacci-based targets. You know, you can actually learn how to do this yourself. You simply just set up a Fibonacci tool on there. This is how much I know about it. I call it a Fibonacci tool. And then it gives you fib levels for targets. You can use that to set targets. But what you've done at that point is you have completely removed emotion from the profit-taking process. You said, my strategy is I exit when it reaches this, period. I take this much when I get to there. When you get to there, you're going to get the feeling of, oh, but if I take it out now, I would have made more if I left it in there. And then what do? You just go to your strategy and you go, nope. The rational me said, I'm taking out this much at this point. So I take out this much at this point, emotionlessly. The more you can detach emotion from trading, the better you will do. If you bring any sort of emotion into this process, you will get destroyed, okay? Because when you feel emotions, put yourself on this chart. Are you fearful? Great, buy some. Are you hopeful? Don't FOMO in. Because what's going to happen is, as soon as prices go up, you're going to become hopeful and you're going to want to FOMO. Do not FOMO in. Are you optimistic? Start taking profits. Are you full on belief mode? Take more profits. Are you thrilled and wanting to tell your entire family to get in? Take a lot of profits. Do you think you're a genius and you're about to get rich? Get the fuck out of the market. Okay, that's another way of thinking about it. Your emotions are not just your emotions. We're in a mass hypnosis. We're in a mass psychosis called get rich quick schemes, AKA crypto. So when you're feeling these things and you feel it around in the room and everybody thinks you're gonna get rich, exit, okay? Now, if you have target base, sometimes the question comes up, they'll say like, well, I'm in 7 coins. I have 7, 10, 20 coins in my portfolio. It's on the way up. I said I'm gonna take whatever, $5,000. So there's different target base. So like some people do it, if you want to simplify your life, you just go my entire portfolio, once it gets to a certain level, I'm taking a certain amount. Put in 100 grand, as soon as it gets to 200 grand, I'm taking out 50 grand. Okay, great. So then you have 10 coins. How would you calculate how much to take from each coin? Okay, I'm not going to pull it up here because there's some sensitive information in there, but ideally what you do is you take your profit on the, so you go to a coin and you find out, okay, I entered this coin at 1,000, now it's at $4,000. And you take $3,000 of profit, you divide it by the total amount of profit that you have, So the total amount of profit in that case was $100,000 because I entered with 100 and now I have 100 extra. I take my coin profit and I divide it by my total profit, so I know the ratio of how much profit is coming from that coin, and then I multiply it by how much I'm withdrawing. And we'll go through this. I'm going to do like stop losses and profit taking actual tutorials. So at that point, this will make a lot more sense. It is, because so it's not one ratio. You do it for each coin. So like if one coin made you more money, you pull more from there. If one coin made you no money, then you don't pull it from there. But we'll talk about this. But there's a calculation you can use to be able to figure out how much to take from each coin. So that's if you're saying my entire portfolio, once it gets to blah, 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 I will take a certain amount of profit, right? The other thing you could do is you could say, once it gets to a certain point, I'm just taking 10%. So you can take 10% of each coin. But that tends to be less effective because you're not letting your runners run, because these coins pop off at different times, right? Another thing to think about is like what's happening right now, or what just happened yesterday. You know, Bitcoin fell off of a cliff, and guess what happens next? Altcoins pump, okay? The large cap altcoins pump. Then once the large caps settle off and the profit taking happens with the large caps, then the mid caps pump. Large caps are like, you know, your 10 billion and above coins, or a billion and above coins could be considered large cap. Once the profit gets taken on those, then the smaller coins will pump. Then the smaller coins will pump. Eventually, shit coins pump. The moment shit coins pump, I look for the door so hard, I run. The moment Shiba Inu pumped, it was like the final signal for me. I was like, okay, great. If the money has flowed all the way down to shit coins, this thing is not going anywhere. Last time when Dogecoin pumped was right here. Dogecoin pumped right there. Shiba Inu pumped, I think, somewhere around here, right? So it should be a signal to you to get out of the market. But if you're a market timer and you like to time these things, when Bitcoin is going up, altcoins will go up a little bit, but they'll take a break. When Bitcoin stabilizes, it stabilizes because people are taking profits on Bitcoin, and that money will flow down to altcoins, the bigger altcoins. When those stabilize, when those pump and then stabilize, smaller, 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 and then guess what the entire market will do? They'll take a tumble off of a cliff in some capacity. So a simple way of exiting is the DCA in, DCA out. Who said that? DCA in, DCA out, right? DCA in just means buy, 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 buy. You just find a good entry position. Like here, you would buy, 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 buy. You ideally try to buy in chunks, or like, you know, if you want to do a monthly entry, you're saving yourself a lot of trouble. It's just close your eyes and you do that for 5 years, you're going to be perfectly fine because your prices are going to get averaged out with how much you're entering. If you're doing that in a shorter time scale, then ideally you want to find good entry times and then DCA your way in. But the point is dollar cost average your way in. Because if I buy, then my average entry price is actually this line right here, right? Even if I want buy, my average entry price is actually right there. And that saves you from volatility. It goes up, it goes down, it doesn't matter as much. Now, DCA is geared towards you protecting yourself from when it goes down. Because you were, in fact, the reason why you're doing that is because you're saying it might go down at a later period of time. Therefore, I will enter in chunks because if it goes down, then I will actually enter at a lower price. Me personally, I don't DCA very much. I simply just sit and wait, and I just watch the market. And when I see that it's at a good point, I buy in a big way. You know, sometimes I'll DCA if I feel like I'm unsure about things, but I don't do things when I'm unsure about things. So that's the next thing. You can sell the same way as well, right? If you buy, you could sell. Because even if you sold down this, which I mean, I personally wouldn't be selling down this, but let's say you sell. Maybe you sell, then your average exit price would be right there. If you can hit your average exit price 80% of the way up, you are an absolute magnificent genius. You can play that game maybe twice a year like it's happening now, or you can play it, you know, whatever amount of times you can do that, you are one of the best traders out there in the world. Most people can't call even 80% of the top, let alone the whole top. So you could, yeah, you could take like, you know, 10%, 10%, buy, 10%, 10 until the 100's in. Because remember, as it's going up, this 10 is growing at the same time. This kind of, you know, there's a tiered stage. And then once you're in, you could even start exiting from here blindly, you know. And if you were to just do that 10 all the way up, when you're selling, sorry, one sec. When you're selling, when you sell 10%, 90% is left. So next time you sell 10%, you take actually 9%. Now you have, you know, 81% left. So when you sell 10%, you actually sell 8.1%, right? So as you're exiting in smaller chunks, you actually never go to zero because you're taking 10% of what's left. That's one way of doing it. Or somebody's like, I'm just going to take 10% of my total initial investment. That's multiple ways of doing it. That is very subjective. It's very subjective. Somebody who's playing the 5 to 10 year game, monthly is a timeline. Every month you enter, you know. Somebody who's playing the I'm gonna exit within a year game finds good entry positions, especially when you get opportunities like this, you would want to enter during this period. That's kind of what I did. I DCA'd like right there. That's like half a month, right? Yeah, you could do it like daily basis. It depends on what your time horizon is, right? If you're somebody who wants to like capitalize on a 3-month game, you're playing the game wrong, first of all. If you want to make money in 3 months, you're going to lose your money. But let's say a 6-month game, right? Which is like the minimum you should even think about. Then entering over a month and then holding for a few months and then exiting over a month makes a lot of sense. If you're on the yearly scale, entering over a month and a half makes sense. But again, I can't tell you what the exact timeline is. It's completely subjective, completely dependent. Now, if you have $10 million to enter, you might take a longer period of time, right? Or if you find a fantastic entry position, you might just dump it all within a week and you can get into it, right? So it depends on the microdynamics. There's no one true answer to that. Now, here's some of my favorite exiting methods. Now, before I go to that, let's talk about this part. There's more than exiting just $2, right? The dollars exit, I like the dollars exit for the time when Bitcoin and everything is tumbling at the same time. Then I like to go to dollars because no matter which asset it is, I can buy it more with dollars. But in a way, my true exit, where I truly calculate my wealth, is XRP. The number of XRPs I make is my end goal in the whole thing. It's, as far as I'm concerned, it's going to be the global reserve currency. I can see the wave coming, and when it happens, I will come to your house, Nick. Okay.
Did you buy more at 60 cents?
My entry price was at 60 cents. I'm in already. I never left. Yeah. Yeah. No, I entered 60 cents back here. Right there.
I think we're going to have another drop to that.
Yeah. We might even go lower than that.
I bought with 10%.
No. But my thing is, I'm trying to make the most amount of XRP. I have them. They can go wherever they want. I have them. When it goes up, at some point, I will sell all my XRP so that I can go and buy more XRP. Right? And you got to have the, like, so if you, like, I have a conviction to understand where this thing is going. I'm playing the infinite game. I want to buy the oil that's going to make generational wealth over the next 10 years, and I've made my bet, right? And I do have, I'll be investing more in my portfolio in other places as well. I'm not going to just stay 100% XRP forever. But my point is, if you are accruing an asset, it's actually better than if you're accruing dollars. People denominate themselves in Bitcoin. So, okay, so then look at the Bitcoin pair. Right? This is Ether. Ether Bitcoin. We've completely removed the dollar out of the whole equation, right? I want to get into Ether when it's here because it's making more Bitcoin. I want to get out of Ether when it's here. I mean, like, Ether is killing Bitcoin in general. So like, this is just an example. Okay, let's go here. I want to get into Ethereum when it's here. I want to go to Bitcoin when I'm here because I've locked in my Bitcoin. I have more Bitcoin. When it goes down, I can buy more Ethereum with that Bitcoin. Then I buy more Ethereum. When it goes up, I can buy more Bitcoin with that Ethereum. When it goes down, I can buy more Ethereum with that Bitcoin. So what am I doing? I'm making more Ethereum than more Bitcoin. I'm buying, it's like I'm getting more silver, and then when silver is going to make me more gold, I go buy gold. And then when the gold is going to make me more silver, I go and buy more silver. And then I just keep going back and forth. Now, what's going to happen is when you look at the dollar denominated value of these things, there's going to be times when they just both fall off of a cliff.
Yeah, don't look at the dollar. I've got a friend who actually trades between Ethereum and Bitcoin. Every time he sees Ethereum dominating,
Stefano.
So he just looks at which one is dominating each time and just flips over. So it's just accumulating and accumulating more and more as time goes on.
Yep. Yeah. That's a genius way of doing it.
Yeah.
You're making more gold or more silver. You're not going to lose this game. but you're making more. If you're holding assets thinking, I want more, dollars in it, but you never actually take the dollars, you didn't make more dollars. You're hypothetically looking at some fake number on the screen that goes up and down and thinking that's how much you have. You actually don't have it. Put it in your bank account, turn it into land, turn it into, go on a trip with it. Then I'll actually be like, okay, cool. You have the wealth. You're actually living the wealthy life, with that asset, right? So that's a coin pair way of trading. You can take profits from different coins. Think about this. There's 21 million Bitcoin that will ever exist. And there's today 51 million millionaires in the world. So if every single millionaire wanted to buy one with all their net worth, they can't today. And we're about to have a ton more millionaires who are going to be half of this room, most of this room, right? You know what I'm talking about? Yeah. But if every single millionaire wanted to spend all their net worth to buy one, they can't. Just like there's 30 Picassos in the world and every single millionaire in the world wanted to buy one, they can't. They just sold for $110 million and then they'll sell for $500 million, then they'll sell for $1 billion. The dollar denominated number has nothing to do with it. So if you're denominating yourself in Bitcoin, good on you. You figured out the game. You figured out the game of making more of something that's going to be so valuable that one day one will buy a private island.
So you guys got to figure out whether you want to be crypto rich or fiat rich.
Exactly. Here's the best part about being crypto rich. I can make as much fiat as I want tax-free against my crypto. Okay, I have 100 Bitcoin. I can go to 1,000 lenders in the world, institutional grade lenders, and I'll be like, here's 100 Bitcoin, give me $500,000. They'll be like, yeah, let us hold the Bitcoin. Not even 100. Here's like 20 Bitcoin, give me $500,000. No, 20, 10. No, here's 50 Bitcoin, give me $500,000 of cash. They will transfer the cash like this to my bank account. No bank in the world will ever reject a loan from JP Morgan Chase or Genesis or these giant entities that lend you that much money. The money will move seamlessly without any red flags being hit. Money will come into your account. You will not have to pay a single cent of tax on that money. And I can go and blow it on something. And my 100 Bitcoins simply have to go up in price a couple $1,000s for me to make that again. And Bitcoin doubles in value for the last 10 years. So that means, let's say I have, $1 million of Bitcoin. Next year is 2 million. Next year it's 4 million. Let's run that 10-year calculation. Million, 2 million, 4, 8, 16, 32, 64, 128, 256, and 1 billion. No, 256, 512, 512, yeah. $512 million that I'll get in 10 years. And if I kept borrowing $500,000 against it, at the end of 10 years, I borrowed $5 million against $500 million. And guess what I'm going to do? Not pay off that debt ever. I'm just going to keep generating debt. That's why Trump was bankrupt 7 times. He knows how to play the money game. The money game is generate debt, generate debt. The entire world is debt. Money is debt. Everything around you is debt. Okay? So if you have great assets, you can generate an infinite amount of debt against those assets and generate an infinite amount of money and spend it and enjoy it. And you keep accruing your dollar denominated value in the thing. And then even if you wanted to pay the debt, okay, I'll borrow $1 million today. I'll spend it. I'll buy $1 million villa today. They're going to inflate the money supply. In 10 years, they're going to have 10 times as much money as they have today. Great. That villa is going to be worth 10 times less. So when I have to come back and pay the $1 million off, like imagine you took 1 million rupiah and you bought this bar 30 years ago, and then you had a 30-year loan on it. And today you got to pay 1 million rupiah for this bar. Any of you want to buy this bar now? It's 1 million rupiah. But you just had to take debt. It's when you take debt and borrow from the future against your assets and generating cash that way, best way of generating assets. So my game is simple. I do this, okay? I take profits. First of all, I reinvest them into crypto when I see that it's a good time. When the bad time starts and it's time to exit crypto and I'm going to be out of it for a year, I will wait for it to crash back down. I'll go back and buy super safe assets, XRP, maybe some Link, maybe some Ethereum, maybe some Bitcoin. Only stuff that I can borrow against. I will take it to a bank and go, here's solid assets that have already dropped in dollar denominated value. They're not going to go much lower. I want to borrow 20% of the value of these assets. They'll give me 20% loan against the assets. I will go set up a bunch of businesses that make me 100% ROI within a year. Those businesses will make me back the money that I've borrowed from them. And then these businesses are generating money ongoing forever, the revenue streams. I will take that money and I will go back and buy more of these Bitcoin, Ethereum assets. And then I'll take the assets I just bought back to the bank and I'll be like, give me a bigger loan. and they'll give me another loan, and I'll go put it into my revenue streams. And the money that's coming in from the businesses, I keep putting it into assets. So I just turned Bitcoin into businesses, money that I get to spend, and more Bitcoin without actually completely. And what did I actually get? I got more debt. Great. I want to be the most indebted guy in the room. Robert Kiyosaki, Rich Dad, Poor Dad, read that shit. Debt is the way to get rich. Okay? Credit card debt is the worst thing that you can do. That's slavery debt. Debt that generates you money and assets is the best debt. So, okay, accrue more assets. Start playing the game of accruing more assets, and you can do it like this. You can do it by turning it into more dollars and buying more assets, however you want to do it. But each one of those will require you to exit your position at some point. If you don't exit, you ain't making shit. Okay, so now let's get to my favorite way of exiting. My favorite way of exiting, trailing stop losses. Because we have lives, we like to live them. That's why we're in Bali. Crypto should not be your life. I know it's mine, but even then I'm crypto, and then I'm off. I'm on a beach, paragliding, playing video games with my stepson, hanging out, chilling. So how do I make sure that I don't have to sit there and watch it in case the market tumbles, blah, blah, blah. It's called stop losses. We're going to do a whole meeting about stop losses because a lot of people don't understand them. But it's simply like, it's an automated order that says sell at this point. It says sell at this point. You can do a few different things. You could set target-based stop losses. And I know to the people who are pros, they're like, bro, you're talking about stop losses. This is a basic shit. But trust me, most people don't know about this. You can set target, they're not really stop losses, but you can set target-based sell orders. So, if you're somebody who says, I get in here and my target is when it doubles, I'll take 30%, you can set an automatic order that says when it hits that target, or hits that price, sell this much of my coin automatically. You can set 4 of those, 25, 25, 25, 25. As soon as you hit your targets, it's gonna sell. Guess what's gonna happen then? The market's gonna run off without you. Guess what you do? Relax. It's okay. Okay. At worst, you made some money and the market runs off without you. At best, you made some money, runs off, and then it comes back and you get another buying opportunity. But you made the money. Okay. That's target-based exits. What I do is I don't worry about targets because I'm like, I don't know where it's gonna go. I don't know if it's gonna go 30% up and then it's gonna end. I don't know if it's gonna go 300x or 300%. I don't know if it's gonna go 10x or whatever, right? So what I'll do is I'll enter at good positions, and then as it goes up, you could set something called a percentage-based stop loss. You simply put it a certain percentage below the price. If you want to do that, that's the simplest way of doing it. You don't have to know chart analysis or anything like that. If you want to do that, a 30% gap between the price and your stop loss is actually the most successful. Okay, in crypto, we drop 30% pretty often, and then it kind of goes up again. But a 30% stop loss is low enough so that they won't come down and hit your stop loss. Now, somebody might have had a 30% stop loss at we had stop losses at 40, at 42, 45, and 50. That's why the price of Bitcoin went straight from where it went from down through those stop losses and stopped all those people out. Okay, so you do run the risk that they're going to come in and stop you out and then run away. That's why this happens in the market. You see these wicks? These wicks are basically the price action being manipulated to come down and hit the stop losses, and then the market runs away on you. But at the same time, if you got stopped out here, you had another good entry position right there. Right? So it's not the end of the world. But you could just simply set a certain percentage away from the price that you're having the stop loss. When the price moves up, you move your stop loss up. And it's not that complicated. Google how to do it on your exchange. It's pretty simple, but we'll go through it. What I do is something that pro traders do, and it's kind of it's a more flexible strategy. So what I do is it's called a trend-based stop loss. So my thesis is it's going to go up. I make money when it goes up, right? And I want to let it go up as far as it wants to go up. So then I'll enter anywhere here, right? When it goes up and it creates like this, technically this higher, makes a higher high and then a higher low, which is like right there. My thesis is it's going to go past that. If it comes back below that, then the trend is changed, right? If you don't understand trends, please do a basic research on it. But a trend is simply An upwards trend is it makes higher highs and higher lows. This is technically doesn't count as a higher high. This would count as a higher high, and that would count as a higher low. But I'm just giving you examples. Let's do this one. It runs up, and it makes a higher high here and a higher low right there, right? So that means it would have to go past that in order for it to get to the point that I would say, yeah, it's still in an upwards trend. So once it does this and it makes this higher low, first of all, when I enter here, I'm going to wait for it to go up, and then I'm actually going to set a stop loss right where I enter. Because my thing is, if it comes back to where I entered, then the trend isn't the way that I was expecting it to go, so I won't lose any money when I exit. Just a little bit above, yeah. Like there's always like slippage and stuff, and plus it's nice making like pennies, you know, and not losing money. So I let's say I enter, I don't know, right here. Let's say I enter right, let's actually say I enter right there on this peak, you know, and I thought it was going to go up and it went down. I'll enter, I will not set a stop loss, okay, because I'm in the art of not losing money. When it goes down, chill, hang out. This is a good asset. I know that it's meant to go up. I'm going to hold it. Once it goes past my entry point, I will actually put a stop loss right there. What it'll do next is, where'd it go? What it'll do next is so it would have to go like up here for me to move my entry point to here. And what it'll do next is it'll probably come back and hit my entry point, so I'll exit. So I didn't lose any money in that trade.
Can we zoom in on that so everyone can see?
Can you move it that way? So even if I entered right there, once it moves past that in some gap, like usually about 15 to 20% above where you entered, it's a good time to put a stop loss right where you entered. Okay, because now it's somewhat above where you entered, and it's unlikely to come back and hit it. Like 15 to 20% is pretty successful for me. But I'll enter here, it'll go down, I don't do anything. When it comes back up, don't do anything. Bounces around, and then it leaves, and there's a 15% gap here, I put a stop loss here. So now if the trend changes and it comes back and hits, I will not lose any money. Once it goes up higher, once it's made this higher high compared to a higher low compared to where I entered, and it moves up further, I move my stop loss to here. When it keeps running up, I mean, like technically I could count that as a higher low, but even then, let's say it goes up and creates this higher low, I don't move the stop loss to that higher low. I leave it here. Because if it's moving here and you move it to here, so they're going to come back and hit your stop loss and run away on you. So you put it here, you let it run up, make the higher low, don't move it. Let it move another 15, 20%, or at least on a proper upwards trend away from where your higher low is. Once it has a significant gap, then you move the stop loss to right there, to the bottom of this candle. It keeps going up, it makes this higher low. I don't move it. Because if you move it too early, because what some people do is they go, oh, well, I'm going to miss out on this much money if it comes back down. Remember, we're not in the game of worrying about how much money you missed out on. It's about how much money you do make. So if it's here, it goes up, makes this higher low, don't do anything. It goes up and does this, there's not enough of a gap to move the stop loss. Once it moves a little bit further, then you move the stop loss to here. Okay? Goes up, makes this higher low. Don't do anything. Just keep this. If the stop loss is here, and I guess if there's enough of a gap here, then you move the stop loss here. And then you keep doing that, and then eventually, once it goes up and makes this higher high, and it moves, and not even higher high, it just moves past your higher low in a significant way. You move the stop loss here. So what would happen at that point? At that point, in this scenario, once it moves up here, you don't move anything. Once it comes back and hits, you sell right there. So what you did is you capitalized on this much of it, you missed out on this much of it, and you automated this process. And this is on the daily chart, right? One of these candles gets printed in a day, so you have time. Like you can just look at it. If it doesn't do anything, you don't move it.
Can I also say, like,
He has it.
So yeah, for different people as well, like sometimes they take a little bit of profit here, a little bit of profit here, a little bit of profit here, waiting for that bear market as well. So even if you're taking, like, let's say 10%, 10%, or 5%, 5%, and you're waiting for that drop again somewhere down here, and then obviously you can enter in again at a very low rate.
So that's a combination of like a target or like a uptrend.
Yep. So you're
profit taking
DCAing
strategy.
out slowly. Yep.
So there's that. You could, and then it was one day. See, they're doing the absolutely nothing strategy works, and then there's one day that it doesn't work, right? That strategy, that guy who did nothing in 2017 made more money than the guys who were doing this for the entire year of 2017. And then come December, that guy lost 70% of his portfolio, and the guys who were doing this kept 80% of their gains, right? You can do nothing, but expect that somebody else is going to take your money. The market does not work by you doing nothing and making money. It's a simple process. Like if you plan on doing nothing, then expect that it's going to go up and it's going to crash on you, and you still do nothing. And between where you entered and where the other side of the crash is, you will make some money. Then okay, you're playing the 5 to 10 year game, right? Otherwise, do something, because the only time you make money is when you do something. Otherwise, you're just watching a hypothetical number. And the thing is, it's easier said than done. When you watch that hypothetical number go up, your emotions change. You're happy with your spouse. You're living a good life. I'm serious about this. When it falls off of a cliff, you're going to lose loved ones. You're going to lose the thing you can't buy with money because you're trying to make money. Never lose the things you can't buy with money and make the things you can buy with money. The things you can buy with money are fucking worthless compared to the things you can't buy. This is a much bigger game than just money. Your net worth being attached to that, you're going to lose relationships. You're going to lose assets. You're going to lose your fucking mind. Yeah. Turn it on. There's a little. Yeah. When do you know when to buy back in? Lower than when you exited. Lower. Yeah. Sometimes days, but just be patient. A lot of people take it patient. Oh, Jesus, I'll buy again. Lower than when you exit, and when you feel like shitting your pants. When you feel terrified and everybody's terrified, that's when you should enter, right? On the shorter scale, when it looks like it's going much lower, that's when you should start to enter. If you don't know the entry price, start DCing your way in, and then it'll keep going lower and you'll keep buying it up, right? Just lower than where you entered, because you won the game the moment you exited high and entered lower. You've made more assets. The rest of it doesn't matter. Yeah, you might have to hold it for some period of time. It's cool. Like the assets that I buy are the ones that if I had to hold it for 4 years and they didn't do anything, I'm good. I know I got bars of gold. I don't care where the bars of gold are going. Like right now, gold hasn't done anything. Silver hasn't done anything. So people are like, the global money that's been money for thousands of years is no longer money. It's shit. But if you're accruing more bars of gold, you're good. You're playing the good game. But you might have to wait years to get to the point where you actually make money out of it.
And so what happens if like, it hits your stop loss, you sell out, fantastic, and then it just comes back up again after that?
Okay.
Do you okay.
So you don't have to be there.
Yeah. Yeah. So would you put the buy above?
First of all, this trend-based
what
strategy.
If it doesn't go lower? What if it just goes up from there?
But the trend-based strategy is based on selling the moment the trend changes.
Okay.
Right? A trend is your friend.
Yeah.
So when a trend shifts fundamentally and it goes below its highest high or highest low, at that point the trend has shifted negative.
Yeah.
Trends almost always play out in some capacity before they reset and start. It's the probability of a trend kind of resetting and going below its highest high and then completely flipping and shifting and going the other way is very low. If that happens, great. Put in a buy order a little bit higher than where you entered or exited. Now you bought back in at some place. Great. What did you lose? Nothing, right? Like, I guess, what did you lose? You made a little bit of less assets. Okay, well, the next time if you play this strategy over enough times, the next time you call one of the actual dips, you'll make 20, 30, 50% more assets. So that little bit of loss. And the whole point of trends is when trends change, it takes time to change. And once they change, they do tend to, like this is momentum, right? Once the momentum shifts, markets momentums don't just go completely negative and then completely positive because it's psychological shifts and those take days and weeks and months to play out, right? So if you're following a trend, yeah, you'll exit right here. It'll look like it's running away on you. You're gonna wanna jump back into the market, but your thesis is, I exited because the trend reversed down to here. This low is lower than this low. We're in a bearish trend, period. Great, I'm gonna let the bearish trend play out. Okay, I'll buy in here, fine. I exited here, I bought here, I won the game. Okay, and the next thing that happens is it just goes sideways on you for some period of time. Okay, you entered here, it goes up, it comes back down, it does nothing for some period of time. You're cool, you just hang out. And then when the trend resumes, you resume your stop loss strategy again, right? Yeah. And this is, Now these markets are so manipulated that this is being manipulated by technical traders, and technical traders love creating trends and like, you know, trading trends. So you start trading the same thing. Well, at least that's how I do it. And for me, simple thing is like this was beginning of the year. This was the middle of the year. Bought once, sold once on the whole portfolio. And yeah, I missed out on the gains at the top. Who gives a shit? I made the money. And then on the way down, I made more Ethereum, right? The missing out part has absolutely nothing to do with actually what's going on, right? Okay, so we got 9 minutes left. To answer your question about off-ramps, you gotta have off-ramps. Crypto is an island, which, first of all, if any of you tried to do this in a big way, getting your money into crypto is a pain in the ass. For most banks, for most countries, it's complicated. You actually have to go through certain steps, otherwise your bank will call you, transfers get messed up. Like, there's so many different things that happen where they will try to stop you from putting your money into crypto. Even harder than getting your money into crypto is getting a large amount of money out of crypto and putting it back into your bank account. That's why my favorite way of doing it is I just take the crypto, I leverage it, turn it into debt, and the debt gets sent to my bank account. So it's a bank-to-bank transfer, great off-ramp. And plus, I'm not selling the crypto. This is another thing. People think they're gonna take money, turn it into crypto, make more dollars, and then take the dollars out and spend them. Mistake. I mean, it's a good beginner thing to do, but it's a kind of a mistake in the long term. Okay, let's say you spend $100,000 today. That means next year it would have been 200,000, 400,000, 800,000. That 100,000 would have been $50 million in 10 years. You're not spending $100,000, you're spending $50 million of asset value 10 years from now. So what do the wealthy do? Wealthy do not buy real estate and then spend the real estate on coffee. The wealthy buy real estate and then leverage the real estate to generate debt, and then they use the debt to buy a coffee shop. You know? So one of my favorite off-ramp in general is I take my crypto assets and I turn it into debt. I even like to take the debt and then turn it into business revenue streams, and I use the revenue from the revenue streams to actually spend it on the things that I need to spend it on, right? So I've now taken debt, turned it into something that even generates value from the debt. So it turned the debt and liability into an asset, and then the asset is what I can actually spend money from. If you do have to off-ramp and you do have to turn it into cash and put it back into your bank account, figure your shit out. First of all, which jurisdiction are you in? Where's your tax? Where are you planning on paying the tax? If you're not planning on paying the tax, you're not gonna get wealthy. Simple as that. The wealthy don't pay tax, but not by actually avoiding tax. They don't pay tax by having tax strategies set up that allow them to not pay tax. Okay, that's another thing we do. We actually set up tax strategies for people. But where are you moving the money to? Good luck moving $1 million to Indonesia. Let me know how that goes. Probably not gonna happen unless you have great banking relationships and you're a giant conglomerate, or you're a company and you're moving $1 million through corporate channels. But learn how to take the money out. Try it. Try taking some money out and then see the kind of headaches that happen. But set up at least 2 to 3 off-ramps. If you're gonna stay in personal accounts, set up 2 to 3 platforms that you can go through, and set up 2 to 3 channels, at least, I like 3 channels, where you can pull the money out, turn it into dollars, put it back into your bank account, take those dollars, go buy a coffee with it. If you have not done that, make sure you have those ducks in a row, because then if you're planning on making a lot of money from crypto, it's not gonna come out the way that you're expecting it to come out. And you don't wanna have these problems when there's a large amount. Fantastic. They're a fantastic off-ramp. Crypto credit cards are, if your plan is to spend the crypto, it's a great way of doing it. You completely subvert the banking system. You don't have to go around anything. Some of them give you Bitcoin, cash back, all that kind of stuff. So if you do, I like to have as many of those available. That's my like emergency red button exit, you know. And that's also another way storing money outside of the banking system. You can actually put it into those platforms that have those credit cards, and they are not privy to bank bail-ins.
So with the loans, you're talking about taking on your crypto to set up different things.
You can lose all of your money.
Right, of course.
Step number 1.
But also, like, with the strategy of like selling multiple times a year and getting back in, you'd have to, I guess, buy certain cryptos.
Let me
you
explain
just
that.
want to hold.
Let me explain that. So number one, if you take a loan here, you're going to lose all of your money. Do not leverage yourself in this environment at all. I mean, you do what you want. You might be a speculator who likes leverage. I do not leverage myself in bull markets at all. I leverage myself in proper bear markets. So once it, like down here, wasn't a bad time to take a loan because it was already crushed and there's high conviction that it's not going to go much lower than that. But even then, I don't recommend that. I recommend okay. This is 2017 peak. If you took a loan here and you leverage your loan, you got a 20% loan to asset value, and you borrowed 20% of the value of your loan. When crypto fell off of a cliff, 80%,
You got liquidated.
all of your Bitcoin disappeared. So this is a great way to lose every single penny that you have by doing this the wrong way. Okay, do not do this now. But if you took a loan here for 20% when Bitcoin was at 3,000, and you knew that it's not going to go much lower, then it's a fantastic time because you could have taken a 20% loan and even just bought Bitcoin with it, and the loan, the actual borrowed value would actually go up and make you more money. If you did it here, if you leveraged yourself 50%, you went from, what is this, 10,000, 9,500 down to 3,000, you got liquidated. If you did it here, great time to do it, right? So a safe way of doing it is do not leverage yourself beyond 10% in a bear market. In a bear market, on safest assets like Bitcoin, do not leverage yourself beyond 10%. Even when you do the leverage, even when you play the leverage game, I like to leverage myself like in these periods where it's actually like kind of stabilized a bit. Even then, like 10%. If 10% is too small, don't play this game. Okay? Grow your wealth until the point that you can take a smaller amount of Bitcoin and leverage it. But leverage is the best way to lose all of your money, 100%. Okay? So, yeah, thank you for that. Yeah.
Just one question.
Yeah.
Currency.
Yes.
What would you recommend if you want to keep it?
You could put it into like PaxG, which is gold backed, depending on what gold is doing, right? You should, like, if it's short term, USDC. Like, we hate the US dollar. Printing of dollars reduces purchasing power over a year to 2 year period. If you're sitting in it momentarily, like if you're just transitioning through, fine, USDT, I don't care. If that's the best way for you to do it.
USDC is a
stable coin. Yeah, like that's how I store most of my actual wealth outside of the bank.
Right.
Is as a USDC stable coin. So if you're going to be sitting there anything for like a few months, like 2 to 3ish months, stablecoin is perfectly fine. If you're planning on sitting in it for like a year, I don't sit on things for a year. I would take it and I'd put it into revenue streams and generate, like we put it into government tenders that return 15% within 4 months. We put it into Amazon stores. We'll put it into digital economies where there's gamers making money for you. So you set up these businesses that have a reliable return of around like maybe a year and a half to return your money. So if you're going to be sitting there for a year, you should be doing that because they will reliably make you money. And then when your investment comes back out, you can go back and buy the crypto. Right?
There's also another way.
Yeah, staking, yield farming.
Yeah, yield farming. Yeah.
Yep.
So like you can get BUSD, for instance. Like right now, I'm getting 104% off my stable coin. And I'm just sitting that I'm just parking that money, waiting for that drop to happen so I can then use that money to be able to purchase something.
But if you're making anything less than 25%, you're still losing value on your stable coins.
Bingo.
Because they printed 25% of stable coins last year.
Landshare.
So you have to
Landshare.
beat the 25% monetary inflation supply for you to just break even.
Landshare.io.
Yeah. Nice. If you have any questions about that, Wes helps people do that.
No, it's not fixed. It goes up and down. Like if I check it now, it might be at 98%, or it might go up to 110. True.
Right, but there's literally 1,000 ways to put your money to work. Do not let your money sit there for a year and not make 25% on it. If you let this sit there for a year and not make 25%, you're losing 25%. If you make 25% on it, you're losing $0 of purchasing or zero of purchasing power. And if you're making more than that, now you're playing the game of actually accruing more value.
What was the other crypto asset that's gold backed?
PAXG. PAXG. It's gold backed, but gold is completely manipulated right now too. So it's a very long-term, either a long-term hold or you look at what gold is doing. But when there's bear markets, gold does well against bear markets. It's also used to arbitrage against crypto.
Yeah.
So yeah, if you like gold, that's a good place to sit. The Indonesian government just released a tokenized form of silver through the POS, the Indonesian post office. So you can actually invest in a tokenized version of silver. There's tokenized forms of real estate coming out. There's many different ways of putting it into different assets which perform pretty well. You can buy them in the tokenized state. If you guys want to learn about a lot of these more complicated things, Wes is your man to go to. We actually offer a service to be able to get people into the more complicated stuff, but in a way that makes sense, or at least you can get assistance in doing the actual steps themselves. So okay, it's already 2 minutes over. Thank you guys. Are there any? You just message.
Sim, I have a question.
Yes, sir.
You have posted a couple of things on the group about a Black Swan event in the next 6 to 10 days. Could you maybe touch on that?
The Black Swan event is already playing out. Black Swan event is called Omicron. Nobody could have seen it coming. So out of the blue, nobody could have predicted this one, that the world would go into another set of rolling blackouts or lockdowns and all this stuff. Black Swan event is the next stage of this virus. It has already panicked markets. It's already dropped oil. Oil, and remember, oil bonds and oil lead stocks, which leads crypto. So when that happened, the risk on assets panicked, and then that dropped crypto a bit. Now, the first stage of this Black Swan event has played out. Euphoria has died down, put us back into a state of complacency. Next stage of this Black Swan event should play out like this, put us back into a state of panic and anxiety and capitulation. Welcome. Like, enjoy, like, I got so excited. Oh shit. Mute that guy. He's talking all the time. Who's that idiot? I got so excited when this happened because I have a ton of cash that I'm sitting on. Like when you have cash, you jump for joy for these events. You plan for them, you prepped for them. You're the guy, relaxing and enjoying yourself. Well, I mean, I'm dead like a robot. I'm emotionless, but like, it's good to So when this happens, you're actually ready to benefit from it, right? And that's when the most amount of money is actually made. The most amount of money is not made up here. So that Black Swan event is playing out as we speak. The next logical, the reason why I think 6 to 10 days is one, because there's a few different analysts that I follow who've been dead on with a lot of the bearish stuff, and they're calling something around December 13th. December 15th, the Fed is meeting to have the next meeting where they're thinking about announcing tapering. Market doesn't like that, and they're probably going to announce something to panic the markets. Omicron has already hit, and they've said, oh, it's probably not as deadly as COVID, but in reality, people are dying. They got to blame that on something, so they're going to blame it on Omicron. That's likely to come. Global lockdowns are guaranteed. We're going to have 6 years of global lockdowns minimum until 2026, because the World Bank loans go until 2025, and the new banking system comes live fully completion by November of 2025. So until 2026, expect global lockdowns, which get much worse and martial law happens and comes into the streets, and the unvaccinated become terrorists and are hunted down and put into concentration camps. According to that worldview and that timeline, December would be a great time for institutions to take profits, for fund managers to market off as how much money they've made in 2021. For taxes, it's a great reason to take profits. That's why it happens at the end like this. All of these things coming to a T, and at the same time, bond yields are dropping, oil's dropping, dollars going up, stock markets are taking a tumble, panic has been flooded into the markets, fear is being pumped in from the media and the narrative and stuff. all these things are coming to a confluence. So I would not be very surprised if this happened. And I've seen, and it'll probably, like, you know, when it would be a good time to do it? Christmas. Christmas would be a good time to do it because we're all with our families and we're like sitting with mom and dad and we're like, get off of crypto. And we're like, okay, but it's falling off of a cliff. I remember last Christmas, the 2017 Christmas, that was not a very beautiful Christmas. A lot of people cried during that Christmas. But all these things are coming to a T. A lot of crypto people, yeah. It's up to you to do your own research and all this stuff. This is what I'm seeing coming. If you cash out and you end up losing money because of that, that's not my fault. Don't just listen to me. Do it because it's part of your strategy. I know, like, this sounds like a spiel, and I'm telling you all this stuff, and at the same time, no, if you do things because you listen to one guy, you're completely playing the game wrong. Build a worldview of how the world works yourself. This is my worldview. This is what I'm seeing coming. This is logically for me is how it should play out. And if and when it does, if you're part of it, and I know many of you will not sell in this room. If you're part of it, it's okay. Here's what you do. Do not panic. Do not panic. Qigong, breath work, meditation, yoga, woods, hiking, do any of these things, but do not panic. Okay?
How many percent that it's thing that you said or projected are true or change?
What?
How many percent?
Of things that I say that come true? I don't know. Like 60-ish. 40% of them are wrong. I'm pretty wrong a lot of times. Okay? Yeah, I'm wrong a lot of times, guys. Everybody's wrong a lot of times. You know, I'm not some fucking genius. Okay, I'm just a guy who's researched this stuff for a long period of time. I've just been here longer than you guys. I've been through this. This stuff, like, it plays out like clockwork, and now I'm just starting to laugh because I'm like, I just wish people could see this hypnosis that's going on. If you simply understood the process, it just becomes as clear as day. So I'm trying to help educate you about that. But the way you'll get it, see, right now what's happening is you're in a state of hypnosis. You're in a state of hypnosis. It's called mass formation. It happens when a certain narrative is pushed onto a certain population enough times that they get hypnotized to number go up technology. When your hypnosis will break, one sec, is when the thing falls off of a cliff and your entire narrative gets shaken apart. The most valuable thing you can get is actually that lesson. That lesson is what took me from almost homeless to where I am today. Okay, that lesson is worth its weight in gold. So if you go through it, chill. The real growth is in the next 10 years ahead of us. If you haven't bought shit, don't worry about it. Don't worry about it. You have solid stuff. If you went through the .com bubble collapse, and as long as you had Amazon, Google, and fucking Microsoft and IBM, you became generationally wealthy, even though 98% of your net worth was wiped off. Okay, this is part of the process. If you can't handle the 70 to 80% downside, you will not get the 1,000, 10,000% upside. Okay. Oh, did it shut down?
No, it's not. It was a question.
Oh, okay. No, let's just leave this. How come this looks different? Sorry.
I was just going to say, like, another way to look at it too is say that your hypothesis is wrong and it does start to go.
Sorry.
Say that your hypothesis is wrong and it does start to go back up. Like you say, like, you could get back in the boat, but say that it's right and everything goes down exponentially and you did sell and you get to use all your money to buy back. And I experienced this earlier because in May, I had a whole lot of money in Matic, and it was at, like, it hit like 260 or something, and at 250 I had set up my sell order and I was like, I'm gonna do it, and I didn't do it, and I held on to it, and I watched it go all the way back down to like 70 cents, and I was like, if I would have sold, I could have gotten 3.5 times the amount I had when it was at the top. But it's like sometimes we make ourselves learn these the hard way, and so it's just like, it's worth, even if it's like 50%, just to like wager both ways, it's worth doing.
That's what I did. My
Yeah.
target, my strategy said 50% when I hit my metric at about 500%.
Because it really hurts when you have the idea to do it and you don't follow through, or when someone's been telling you for months.
That's why you got to have a strategy and follow it like a robot.
Sim, but many of us, I don't know, but some of us bought some altcoins and it never got back. So it's also not good to sit on them, right? You said don't sell lower when you buy.
Step number one, don't buy shit coins.
No, but not
Right?
shit, but like Rune, cake. I mean, cake, you also bought cake at some point. So my cake DCA is 20. I don't know if it's gonna get to 20. Should I sit on cake?
So then it's up to you. Like, how functional and useful is cake to society, and do you project that it's going to become more valuable to society and more valuable to the crypto world? In which case, you have an asset early, and you might have to wait it out.
So it's about coin.
I'm a guy. I do not take losses. I do not take losses. I've never sold lower than where I bought it. But that's why I'm so anal about only buying things that I fully research, and I know these are going to be there for the next 4 to 10 years. I don't even touch the other stuff until it's proven. Like I didn't buy many different things which are exploding simply because I don't know them well enough. So I'm not going to buy it. But once I buy it, if it goes lower than where I buy it, I don't sell it. But that's me. I can afford to do that. If you're somebody who's like, well, like, I entered, maybe I have a little bit of loss in the market, and I can exit and I can go buy something that's better.
Maybe it's better to exit of coins you don't believe in.
It could be. Yeah, I mean, like the other thing that could happen is, you exit now and then it drops even lower, and then you're able to buy more of that asset, and then you're able to multiply it well. But the point is, this is completely subjective. You got to do your own strategy. You got to figure out exactly what your plan is.
Because a lot of us bought it in April, a lot of shit we shouldn't maybe.
That's okay. It's probably, if it's good stuff, it's probably going to go well beyond the April, May highs in 2022.
So it could, okay,
The best part of this bull run is ahead of us.
There's going to be a period where everything's flying and we're just like,
It's going to be nuts.
yeah.
The best part of this bull run is ahead of us. And then there's a cliff. Okay, thank you guys. I'm going to shut up now. I appreciate you guys all being here. Thank you. We'll be meeting here from now on. Thank you. Woo. No, let's give it up to you guys for fucking being here, okay? Like, you're actually taking control of your own shit, so please take this away. Take control of your own psychology. Take control of your own assets. Thank you.
Everybody, if you guys want to take money out of crypto in your day-to-day living,